Christian, I know you do global, so it's a very different story for you than, say, someone maybe focused in New York. But how would you describe the state of commercial real estate right now? Good, bad, or ugly?
It's getting better.
Okay, tell me more. Where is it getting better? Where are the hurdles?
Well, in the U.S., it's getting better the most. We have seen an uptick across all asset classes in the first quarter. Even office leasing was year over year 14% up in the U.S., 12% in Asia, and only 8% in Europe. So you see the difference. And we also see that the overall interest in buying commercial real estate is growing. We have a much stronger bidding list when we bring products to market. So we are on a gradual improvement of the market.
So, Christian, when we start to talk about this gradual improvement, we still have to kind of talk about the legacy of what's out there. There are still a lot of issues that have not been resolved, refinancings that still need to be done here. As a percentage basis, though, where would you rank that? Is that a big concern for you right now? Does that fall into a major category, not just of your portfolio at JLL, but your peers as well?
Well, I mean, there's certainly a significant amount of assets which are underwater, where the equity is wiped out and where you have to find new ownership. And so that still has to play through the system. But that will take time. And so far, I would say the lenders have been quite smart. That is not all coming to market at the same time. But we will still see a little bit of hiccups here and there. But overall, we believe that the situation is pretty much under control.
So as some of those things do come to market or potentially fail, in your view, you don't see any real systemic risk as a result?
You know, at the very end of the day, that is a lot of psychological effort, which is also impacting that situation. So if too many bad news are come to the market at the same time, you never know how that will play out. But I'm fairly optimistic that the market will act smartly. We have seen that with the banks who got into trouble, that they were taking out in a very smart way. And there will be probably a couple of more banks which will face issues. But again, I believe that they will be taken out smartly. So overall, I'm not overly concerned that we have a systematic problem to face.
Christian, there are also so many subgroups here, and two that stand out to me are logistics and data centers. So logistics, I felt, were super hot a few years ago, and then other questions as to how many logistic areas do we really need? Are they overvalued, undervalued? And then we have the data center hype. Where do you sit in both of those areas?
Well, as you rightly say, there was a bit of a logistic hype coming through the COVID period, and that has to be digested now. But overall, this is a very strong asset class. With the onshoring and the stronger than expected economy, the market will kind of take up the slight oversupply which we had. And so we believe that the industrial sector, the logistics sector, will come back as on a positive trend relatively swiftly. What we see currently in the data center market is a massive hype. Don't know how long that will take, but at the moment, it's clearly the hottest asset class around.
What form is that taking? Like, what does this cycle potentially look like here?
Well, as you know, the data center market is slightly impacted by the ability to get available grid. And so that hinders the amount of new product coming to market, because many of those products which wish to come to market don't get access to grid. They don't have enough power available. So that can play out over a couple of years, that cycle here, that hype cycle. At the moment, many people are trying to get in, and there's a lack of product. And so we have to see how that whole AI discussion and the need for additional kind of data center capacity will play out over the next couple of years. I'm not in a position to give you an exact prediction here.
Well, you've certainly pushed into it, at least based on what we know publicly over at JLL, not only in terms of the real estate itself, but also some of the services and the software offerings that you've put out there for certain clients. And I am curious about that side of the equation, why you saw a need to do that and what that opportunity is going to mean for the business going forward.
Well, these are two sides. First of all, we have a couple of our own generative AI software products, which we have developed or bought into, and which we are deploying on behalf of our clients to offer a better experience for them, but also to drive higher productivity within our own organization. And then we have that services field where we are offering services around data centers, and that's where we complemented our service offering recently through M&A. As I said, it's a very interesting asset class. All of our clients, or many of our clients, are trying to get into, and that was reason enough for us to broaden our own service capability around that topic.
Do you see yourself expanding that in a meaningful way based on what you can see right now?
Yes, we will continue to expand that, roll that out into other geographies. At the moment, we are very, very strong in the US and in a couple of European and Asian markets, but we still have to expand in a couple of other geographies so that we can give our clients also on the data center side a seamless experience all around the globe.
Christian, as we look to the back half of this year, what region or what asset are you most concerned about?
Well, I mean, clearly at the moment, the offices sector is still under pressure. We will see further value declines for the majority of office buildings. It's only the very, very top end which has stabilized or is even kind of improving already because rents are rising for those buildings. But overall, that asset class is still digesting that massive kind of storm it had to go through. And so we have to be concerned about that probably for another 12 to 18 months. But besides that, I would say all the other asset classes have seen their trough and are gradually improving now, some faster than others.